Well, very good morning. You're watching the CNBC Africa special. It is Monday morning and we have a new finance minister in South Africa. Minister Pravin Gordhan is to be sworn in at 10 a.m. We have a full panel with us to discuss this latest move. And joining me is Gary Booysen, Director and Portfolio Manager at Rand Swiss. We've got Mohammed Nalla from Nedbank, CIB, Lesiba, Mothatha, Chief Economist at Investment Solutions. And we've also got Adrian Saville, who's Chief Strategist at Citadel, who'll be joining us on the line in just a moment. Let's just go around reactions. Lesiba, let's start with you.
Well, so this I think is the right decision. You find that markets have a power to self-regulate and force right decisions. We are seeing a similar outcome here. We've seen bond yields rising by 200 basis points in a few hours on Thursday. I think that has booked the right decisions. This is good. I think it's going to set up an interesting path going forward, although it's not enough.
Exactly. It's not enough. It is good. Gary, we were chatting before we went on air that the market is showing the thumbs up, basically, to the decision. But is it sustainable? Are we going to see the Rand holding at this 15.19 level, or will it retrace back all the way to almost 16 to the US dollar?
Again, I think everyone saw just Pravin Gordhan. They saw that name and there was just a sense of relief that this is someone that carries enough weight to actually stabilize and calm markets. But the fact is, if you look at a Sky News headline this morning, South Africa gets second finance minister in 5 days. This still looks, abysmal from an international point of view. And while obviously you can expect some sort of re-rating at the moment, you will see some relief. I don't think it's going to be as simple as undoing the damage. I don't think you can.
The backtracking that our president is doing right now,
Flip-flopping.
Is it flip-flopping?
Yeah, I mean, Bronwyn, the fact of the matter is I'm certainly less charitable, I guess, than my fellow colleagues on this panel. I think, yes, in the short term, a correction, Minister Gordhan's a recognized name. However, the reputational damage has been done. International investors have been looking for a reason to sell out of an emerging market like South Africa. This has given it to them. And for me, I get the sense, certainly with some of the guys I've spoken to internationally, that there's been a psychological barrier that's been crossed here, where historically South Africa was given the benefit of the doubt for a number of good reasons, that erosion or potential erosion of institutional credibility from National Treasury, notwithstanding the reappointment of Minister Pravin Gordhan into that position, will still linger in investors' minds. And for me, like I said, that is a lingering reputational damage at a time when we can ill afford it, with the Fed this week and capital flows to emerging markets looking decidedly patchy.
Let me bring Adrian in now. Adrian Saville, Chief Strategist at Citadel. Adrian, you took to Twitter last night, again celebrating the reappointment of Pravin Gordhan as South African Finance Minister, but you did qualify that celebration by saying that the process that has been followed is very disappointing, and in fact, to quote, I think you said it has been a disastrous process.
Yeah, morning, Bronwyn. I think that it's been reckless, and the damage is done. So it's very bittersweet in that it begs the question: why did Nene have to be replaced in the first instance? The process to get to the decision and the reappointment of Pravin Gordhan as Minister of Finance, if anything, I think it underscores the institutional strength of South Africa. So there are some elements of, I think, cause for optimism or to give South Africa the benefit of the doubt.
Adrian, we're going to come back to you. If you can just hold for a second, Mohammed. Let's talk about the outlook. You bring the Fed into the equation. Of course, we're waiting for that decision on Wednesday. Everybody expecting to see the first hike out of the US Fed on the cards. That, again, is going to put the local unit under pressure against the dollar.
Yeah, I get the sense, I mean, prior to these recent shenanigans, if you want to call it that, prior to that, our view at Nedbank was certainly that you'd see a little bit of buy the rumor, sell the fact on the Fed. It was largely telegraphed, priced in. Now we've just superimposed a further risk premium over and above any volatility that we would have expected around an initial Fed announcement. Over the longer term, that's really what we need to be looking at here. Over the longer term, as rates rise somewhat in the first world, you could see that sentiment towards emerging markets continues to remain rather rather poor. And that is why I said earlier last week with the appointment of David van Rooyen, as I said, we can ill afford to antagonize international investors. So this might calm the nerves. This appointment of Pravin Gordhan into the role yet again might calm the nerves over the shorter term, but doesn't necessarily change the view that over the longer term, South Africa is still sorely in need of structural reforms that we need to put in place in order to change the trajectory in the direction. We just got a credit ratings downgrade. So don't forget the bigger picture continues to remain rather downbeat.
Adrian, coming back to your point, are we going to recover from the process, which is tantamount to a joke?
Well, the damage has been done. The toothpaste is out the tube. You can't put it back in. Markets have very, very long memories. But there's a lovely saying that, says in my next life I'll come back as the bond market because you can intimidate just about everyone. And Zuma has been intimidated here. I think he's got very, very clear, unambiguous signaling. But, the point about the structural change is that I think the greatest structural adjustment South Africa needs is the replacement of the Premier.
Lesiba, pick up on that discussion.
No, so I think it's not enough what's happening. The markets are looking for more reasons for a sell-off. If you recall what happened in Europe, you get markets that move and it forces political change. And then move further, causes further political change. I get a sense that more is required here. That bond market looks very concerning. It's ominous what is happening out there. The outflows that we're seeing from the bond market is problematic. Because we need to recall that right now in the South African bond market, about 36% is held by foreigners. And when it goes out, it becomes problematic. I do think that more change is required. More decisions need to be made that are hard because we are not out of the woods yet.
Gary, talk to me about the markets. Obviously, enormous falls, particularly where the banks were concerned last week. Is the market going to hold this week?
Personally, I think there's still going to be a lot of volatility coming up. I think Mohammed had it 100% right. There was just that psychological break point that you almost felt. And I think investors just immediately started pricing in South Africa is going on to a junk credit rating. How must we react to that? In response to that, absolutely destroy banks. I think you will see a slight recovery here. But all the rand hedge counters, for example, that did okay over last week. Now with the currency revaluing back towards the 15 level, you're going to see them under pressure as well. You've also got Asia, also in the red this morning. So I don't think the big green bounce everyone's waiting for is going to happen.
Adrian, before we let you go, the big green bounce, Gary refers to it. A lot of people saying Santa Claus rally. Do you think that's really off the table right now? We're just going to try and keep our heads above the water as market players. Yeah,
if we can hang on to a finance minister for a couple of days, I think you might see some sort of technical recovery. The big news, of course, this week is the Fed decision, and I think that's going to have a material impact in that it gives certainty, and I think that's going to be the playbook between now and the end of the year.
Adrian Saville, Chief Strategist at Citadel, thanks so much for joining us. I hope you don't get recalled from your holiday, as most of us have been here on the CNBC Africa news desk. Mohammed, let's talk about the next couple of weeks and what you want to see in particular. Do we have to see more changes within Cabinet for the market to be satisfied?
Bronwyn, this goes beyond political reshuffling. I mean, the changes South Africa need to make, as I mentioned, are deep and structural. Not a lot of people know what that is, but let's unpack that. I mean, the fact of the matter is that South Africa is increasingly becoming uncompetitive. We cannot bank on a much weaker currency to give us that competitiveness because our ability to narrow our current account deficit on the back of higher exports and a weaker rand.
Talking about currency 15.15 on dollar rand.
Yeah, to provide some context for the viewers, I mean, 15.15, that's more or less the level that the rand had gotten to on the news that Minister Nene had been redeployed. So we've taken away the Des van Rooyen premium, but we're still at the political uncertainty premium that's there. Look, I mean, I would expect to see that have a brief look. We did in the Asian session have a brief look below the 15 handle. But like I said, that psychological level for me or boundary that has been breached will predispose us to weakness. As I was mentioning earlier, we cannot just bank on a weaker rand is going to give us an uptick in exports that's going to actually right the ship here. No, because South Africa remains a structural net importer. We need liberalization of labor markets, or at least reform in the labor markets. There's a whole litany of reforms that need to be put in place. I mean, addressing the energy deficiencies. I was reading the newspaper this morning talking about the fact that nuclear had apparently been approved by Cabinet. Now, the fact of the matter is we need detail around that. South Africa can't afford to take the entire cost of nuclear necessarily and dump that onto the fiscus. So if they go with a PPP type of model, potentially we could get it across the line. But these are all of the negative news stories that the market seems to have forgotten about, with the sideshow that has become political maneuvering, political reshuffling. The bigger picture hasn't changed, and unfortunately leaves me still reasonably bearish on South Africa.
Here's a tough one for you. Is Minister Gordhan better than Minister Nene? You didn't see that one coming. Now think carefully before you answer.
He presided over, this is Gordhan, he presided over a burgeoning wage bill in state-owned enterprises, and he also presided over an allocation of a policy that changed how the SARB should look at inflation versus growth, which is problematic because where now the SARB is sitting is having to consider growth and inflation, and have made a situation where inflation expectations are anchored at the upper end of the inflation target rate. Is he better? I don't know. That is why I think he has a tough task ahead of him. He's still faced with the Mount Everest. He still needs to reassure investors that they will remain committed to the ceiling that was introduced under Nene. He still needs to actually confirm that he will not be leftist. He won't be swayed in terms of prudence in adding new expenditure bombs to the fiscus that we find ourselves in. He needs to affirm that the second tier of leadership at the Treasury is actually staying put. For example, the Director General, who has been there for 13 years, has deep expertise, has been rattled, I would imagine. I'll need to see confidence that comes out of him saying, listen, he's with me, he's got my back, we're going to get this going. As it stands now, he still needs to do a few explanations in his turnout. We have been challenged. It's not been an easy outcome. He himself needs to redeem himself of the other 4 years that he was in office in.
Let's come back to you, Mohammed, in terms of the markets. We were talking about a rocky ride, volatility we're in for the next couple of weeks. The banks, are we going to see a recovery in the banks?
I mean, if you just had a look at the value destruction that we've had over 2 trading sessions, effectively, you saw roughly a quarter of the bank's market capitalizations being wiped out. And in that respect, potentially, we could see some stability materialize. I mean, with today, I would expect to see the banks re-rate somewhat or retrace some of those losses. The opposite of that would be the gold stocks that were large beneficiaries of the much weaker rand. They should probably come under a little bit of pressure. But net, like I say, the sentiment, the tonality in the market will remain reasonably downbeat. So I don't think we make back necessarily all of the losses that we'd actually seen over the course of the last 2 trading sessions.
Lesiba?
So for me, the banks it's another ominous sign that we found, because where we sit in South Africa, we don't perform stress tests in terms of how banks respond to an adverse economic situation. When I looked at its movement, it's suggesting that a risk event has been priced, particularly the chance of South Africa being downgraded into a junk status. If you look at what's happening in the CDS market, where investors pay premiums in order to protect themselves against default, it is priced for junk status. It is sitting like that of Turkey. In fact, it's similar to that of Brazil and Turkey, and in it suggests that Moody's, which can actually make a decision outside their planned schedule, they are the only outstanding rating agency to come. They could come and do a 2-notch downgrade, and it's an ominous sign to see banks fall as they have done, more than 10% in a day.
So we sit and chat about this junk status and a potential downgrade, but do people really know what we're talking about here? Gary, perhaps you can just take a step back and give our viewers some insight as to what junk status would mean for the man in the street, because everyone criticizes us and says, look, you're keeping it at a high academic level. What does this mean for us?
I think junk status, I mean, essentially what that does is, I think the most significant movement will be that, funds that, are forced to invest in investment grade, securities will no longer be able to invest in South African securities. So whenever you get a sovereign downgrade, at least the companies within that sovereign must reflect that downgrade as well. So if South Africa gets downgraded to junk, our banks get downgraded to junk, and that's what you will see money pulling out. You'll see stock markets collapsing, you'll see the currency blowing out, and then you start getting the effects on the man in the street. With the currency blowing out, you'll see increased inflation, goods and services will become more expensive, and like has been said many times on the show, inflation really is a tax on the poor. So it's the poor that are going to feel the brunt of it.
And Lesiba, you started out the conversation on the inflation.
Junk means you're going to be in Nigeria, which is in junk, okay? In other words, the interest rates you pay when you borrow will be higher for a government. They will equivalently be higher for a household, because the SARB will have to respond to these higher credit situations with interest rates that are much higher. So all that means less spending,
You're going to have less money at the
expensive
end of the day.
debts. Cars are going to, really, you're going to have a difficult situation, which really is going to happen, because even now, despite Pravin Gordhan, I expect the SARB at some point to call an unscheduled meeting and respond to this with higher interest rates. 100 basis points, 200 basis points, it's very possible.
That's a speculation. We know how much that's going to hurt the consumer.
Yes, I mean, a couple of things here. First of all, the SARB did actually issue a statement late last week saying there's not going to be an early meeting. The scheduled meeting at the end of Jan will be the next meeting. The reaction at that meeting will certainly be watched quite closely. But the one dimension that perhaps we haven't mentioned in terms of the impact of the man on the street, yes, all of the rising costs and so forth, but it also from a government perspective.
Hang on, so the SARB issued a statement now saying that they, or is it?
So the SARB issued a statement late
such
last
short timing
week.
between the
Yeah, okay,
finance
so
ministers. Since Gordhan was appointed,
No.
are they going to? Do we have any clarity?
Once the SARB issued the statement post David van Rooyen being appointed, on this market speculation that there'll be an early meeting called, saying there's no early meeting. The next meeting will still be the scheduled meeting at the end of January, and I would assume they would stick to that. They wouldn't necessarily move, just given the fact that now Minister Gordhan has been appointed. The other impact I was talking about to the man on the street would come from the fiscal side. Is remember, debt service costs are the fastest growing component of our budgeted expenditure, and the more we have to spend on servicing our debt, the less we're going to have to spend on building capacity in this economy. So we consign ourselves to a low growth trajectory. We consign ourselves to crowding out of delivery of proper social services that do need to be delivered to those that are hardest hit.
Lesiba, I'm coming back.
From Harvard was done at Jackson Hole. It shows the throughput of currency depreciation is much severe for an emerging market than it is for a developed market. Where we are now, the rand has depreciated sharply. The SARB talks about how they haven't gotten a handle of the second round effects. It's coming, and it's coming strong. As far as I'm concerned, they need to be even more proactive. That's why they surprised the market with the hike, and they will need to do the same soon.
So gentlemen, you aren't going anywhere, but right now we are going to cross to East Africa and get an update from Bonnie Tunya. Of course, we're going to break first, then Bonnie Tunya will be taking over. We'll get East Africa's thoughts on the latest developments here in South Africa. We are flying through finance ministers at the rate of knots. Hopefully the reappointment of Finance Minister Pravin Gordhan will be for longer than what we have seen from his predecessor.